This is BIX with RoadToRuta.com. A little presentation I'm going to call Silver Volume Insanity. Silver Volume Insanity. First of all, if you've been invested in silver in the last 5 years, it's been a freaking nightmare. Here's the chart 5 years ago. Basically, your investment dropped 50%. Given all the parameters around silver, the supply demand, you name it, the increase in industrial use, the diminishing supply around the world of above ground silver, the fact that silver is consumed with every application, silver should be skyrocketing, and yet those of you bought it 5 years ago in the $30 to $35 range have seen the price of your investment be cut in half, while the very same time the Federal Reserve and the Treasury have been printing money like it's going out of style. If you want to know what's going on, very simple. All you got to do is go back to Ted Butler. And what Ted Butler was talking about in his latest plea for you to send this letter to the CFTC, he's talking about silver positions and silver limits. And he's telling the CFTC that the amount of silver held by these banks and traders, the top 4 traders, is insane, off the charts these days, even though the price of silver has been cut in half over the last 5 years. Please go to RoadToRuta.com, copy and send this letter to all the CFTC emails right there. It's right at the top at Road to Ruta. Don't change anything. Just send Ted's letter to the CFTC to get at least our name in there, and at least to tell the CFTC that we're watching their criminality. But what I want to talk about today is something completely different. The place that the price of silver is rigged is not in the amount of silver held at the end of the day, the reporting amount. That's what Ted judges the manipulation on, how much the biggest traders are holding, what is their position that they're holding. That is not where the price is set on the COMEX or the LBMA. The price is set in daily trades, obviously. The reporting data is just the end of the day where they stand. The amount of volumes that get traded during the day is where the price is set, and it's just insane, and I'm going to show you just how insane it is. This is a supply and demand chart from the Silver Institute, and you can see that mine production and both supply and demand, they're fairly stable over, especially over the last 5 years, but over history, it's been fairly stable. Mine production doesn't go up all that much. Right now, this only goes to 2015. They haven't released the 2016, but it's in the same range, close to 900 million ounces of mine production. And then you got government sales. Pretty much no government has any silver left. And then scrap is just a plug number because they really don't know how much. But if you look at the scrap number, it's going down. The amount of scrap available, mainly because of photography, but other things as well. So yeah, this should be a very stable market, but it isn't. So every year, supply is looking right around 1 billion ounces. Remember that number, 1 billion ounces. And then you have the demand, uses of silver. You got jewelry, coins and bars, silverware, industrial fabrication, all these things. There is an argument for the holders of physical silver to use the COMEX, the futures and options market, to hedge price. There is an argument. Obviously, not everybody is going to use it. And the key, though, is that all these demand numbers here, this is churning of inventory. This is because jewelry makers take jewelry in, take silver in, they turn it into jewelry, and then they send it out. There is an argument for hedging the silver, but not changing hedges every single day. Obviously, as their inventory gets bigger and they want to secure a price, they can hedge. But the reality of the use of hedging versus speculators, and by speculators I mean market riggers, it's like night and day. Very few mining companies are hedging these days. There are a couple corrupt ones like Barrick Gold that still have certain forms of silver hedges. But very little, there should be very little churn of where hedges are, because people's inventory usually stay pretty much static. But there is legitimate purpose for futures and options hedging. Now let's go to something that's going to blow your mind. This is the COMEX data for March. And if you look at silver futures and options, it's about 3 or 4 lines down there, 65,038 contracts in silver futures for March and 5,637 contracts for options. Those are average daily volumes. That's per day. And you do the multiplication, it's about 70,000 contracts. Each contract is 5,000 ounces. That's 350 million ounces of electronic silver are traded per day in March. And remember, the mine supply for the entire year was only close to 900 million ounces. So that number is just way off the charts. And there's no one hedging that amount either. But that's every day. And there's 23 trading days in March, which means 8 billion electronic silver ounces were traded in March on one exchange, on the COMEX. Completely criminal. There is no justification for 8 billion ounces to trade hands in March. Now let's move on. Look at this single day. This is the last month, and these are the volumes traded in silver on the COMEX. Look at April 7th. On April 7th, close to 150,000 contracts traded, silver contracts on the COMEX. That comes out to, at 5,000 a contract, it comes out to 750 million ounces traded in that single day. Why? Who was hedging? Who was not hedging? Silver price hasn't changed all that much. Who was trying to hold that price down? And look at the elevated days since then. There is an epic battle going on in the silver markets. And the CME group is totally complicit. The Federal Reserve, the CFTC, everybody's in on the game except silver investors who are getting fleeced. Now that's just the COMEX. That's the U.S. The other big market is the LBMA. The London Bullion Market Association is not even an exchange. It is absolutely an association. They have a band of criminals. There's 5 clearing members on the LBMA. And the members are, and they tell you who the criminals are, HSBC, ICBC Standard Bank, I think that's Standard Charter, JP Morgan, surprise, Scotiabank, and UBS. These are all criminal banks that got busted in the LIBOR scandal. They're just as criminal in the silver markets. But look at the daily volumes on the LBMA. If you look at silver for the month of February, the average daily volume, these are daily volumes, was 171.6 million ounces of silver were transferred. This is supposed to be a physical market with these 5 players. These are just these 5 players transferring between themselves 171 million ounces of silver. Something very interesting here. And for February, there's only 20 days in the month, so that would be 20 times 171, whatever that comes out to. What does that come out to? 3.4 billion ounces of silver transferred in the month of February, but that is not the number. That is net transfers. Net transfers is completely different than gross transfers. So then how do you determine what is the total amount transferred according to their data? Well, luckily, we had a good friend of ours, Peter Smith, executive director at JP Morgan Chase Bank, wrote an article for The Alchemist, which is the newsletter of the LBMA. And here's what he said about gross versus net, and I highlighted it in purple. However, it should be pointed out that as virtually all gold and silver wholesale traders net all their trades for the same value date with each of their counterparties, the clearing statistics mask the actual underlying value of the daily local London over-the-counter trading. In my opinion, the numbers are probably understated by as much as a factor of 3 times or possibly even more during busy market periods of high volatility in the market. So you can basically take this number, the average daily volume of 171, and triple it. And that is just insane. So 3.4 billion ounces turns into 10 billion ounces of silver transferred every day. Is that every day? Yeah. No, that's not every day. 3.4 billion ounces were transferred in February. Triple it to 10 billion ounces transferred. This is physical silver, my friends. Transferred in February according to the LBMA. Insane. Times 12 per year, you're looking at over 120 billion with a B ounces of physical silver. And remember this chart. This is what happened. This is what happens year after year. We're only looking at 900 million ounces of new mine production that comes into the market. Everybody else is pretty much has a same level of inventory with very little reason to hedge anything during the course of the year. But we come up with 10 billion ounces in February that were supposedly transferred. Where is this silver coming from? Is this real silver? Or is it these 5 member banks trading back and forth to each other? Let's just look at a really interesting required reporting statistic from the OCC, the Office of Comptroller of Currencies in the U.S. This is just for U.S. banks. If you look at, this is June of last year. You look at all the banks that are required to report and savings associations and trust companies with derivatives. This is the derivative report, the quarterly derivative report. And you look at who are the banks the biggest banks in the United States that trade precious metals. This is not gold. They changed that reporting. So this is mainly silver. And if you look at it, it is JP Morgan Chase with twice as much as the second guy, Citibank, and nobody else. Not one single bank has this kind of volume in silver derivatives. Just JP Morgan and Citibank trading back and forth with each other. And the question is, how much do they trade back and forth with each other? Let's look at the next quarter. This was June 2016. And remember all the drama in the third quarter 2016 with Deutsche Bank about to go down? Look what happened. Total top 4 banks had 24 or $25 billion worth of silver derivatives. And in the next quarter, they had $34 billion. An increase of $9 billion in derivatives, or 350 million ounces in derivatives added in that quarter by just 2 banks. How can that be legal? Give me one thing that happened in the third quarter in the silver market. Was there a gigantic find of silver? What happened? Nothing happened. Complete market rigging happened is what happened. And then here's a really interesting thing. So it went from 25 billion to 34 billion, and look what happened the next quarter. Right back down to 23 billion. Talk about rigging, price rigging for the third quarter. Insane amount of rigging. And there we are. That's exactly why we have gone from the mid $30 range in silver 5 years ago to sub $20 silver. And will this end? I hope so. I think the more we expose it, if you send Ted's letter out, it will end one day. Or at least we can put the criminals at the CFTC in jail, hopefully. So make sure you go to roadtoroota.com and print this letter out and send it to the CFTC. This is BIX Weir. Subscribe to this YouTube channel. We're talking about silver and gold and Bitcoin all day long in our criminal ruling class. And we are going to beat them. Don't worry. We'll get there. It's just going to take a lot of work on our part. So get out there and do the work. BIX Weir, roadtoroota.com.